Financial Survival Network, helping you to survive and thrive in the new economy. Get our complimentary newsletter at financialsurvivalnetwork.com. This is the Financial Survival Network.
Financial Survival Network is presented to you by Regal Assets. Buy and sell physical gold and silver through your existing retirement plan, 100% tax-free with Regal Assets. If you want to include physical gold or silver in your existing IRA or old 401k, request your free investment kit, which was recently featured in the Forbes and Smart Money Wall Street Journal magazines. Call toll-free 855-678-6620, 855-678-6620, or visit regalassets.com. This is Kerry Lutz. You are listening to the Financial Survival Network, brought to you by PrepareWise. If you're looking to stock up on some emergency food, go to preparewise.com, put in the discount code LUTZ. They've got a great deal for you. Start getting that food. You never know when you're going to need it. And speaking of not knowing when you're going to need it, Jordan Roy Byrne is on with me now, and we're talking about interest rates, markets, the election's impact on it all. Jordan, welcome back to financialsurvivalnetwork.com.
Hey, Gary. Thanks for having me back.
Always a pleasure. You know that. And it's been about a month and a half since we spoke last. What's your feeling about the precious metals markets? They've totally turned around sentiment-wise since we last spoke, haven't they?
Yeah, I mean, they definitely have. And I mean, looking at the technicals, to me, it's fairly simple. I mean, we had a very strong rebound in both the shares and the stocks, and actually, that's the same thing. I should say the metals and the stocks. And in the metals, gold has some resistance at 1,800. It's just consolidating below there. I mean, it might drop a little bit more. It might drop to 1720 or so, or maybe a little bit below that. Really nothing to be concerned about. Same thing with silver. Silver ran into some resistance at $35. People are, in the very, very short term, people have gotten more excited, or I should say over the last month or two, people have gotten pretty excited. And now in the very short term, we're starting to, work off some of the overbought condition, which, and also you combine that with October, which seasonally always tends to be a weak month. And I think that is why we're here kind of in this little pullback, and I'm looking for it to continue for a couple more weeks, but it's really nothing to be concerned about. As I said earlier, the markets had a very strong rebound. I mean, the momentum, it was really, really strong. I haven't seen that kind of momentum in a long time. And typically you get really strong momentum and blow off moves, which is not good. So when you see the market, it's coming off a rebound with that kind of momentum. I mean, that tells me that there's something explosive coming in the future. And I think, when gold breaks above 1,800, there's very limited resistance at 1,900. And when silver kind of breaks above the mid-30s, it's going to be able to get there in the low 40s. So, I mean, we're just consolidating here and now and just correcting the very strong rebound that we had, and it's really nothing to worry about.
Yeah, I'm inclined to agree with you because they're just, the raids, the way they've been hit subsequently to their going up had much less effect. And they, before you'd get a big loss and it'd start in the morning and it would end that way. Now you could get a big hit in the morning and you'll see it fade throughout the day, and then another one will come and then it will fade. So I guess my point is that there's a lot less effect taking place from these raids, and they're being shaken off much faster than before. And the other thing is with the shares, some of them were so driven down into the ground, even producers or near-term producers, that really there's not much more they could do with them. So once you start getting movement in the underlying metals, the stocks are probably going with them.
Right, and the stocks, and I mean, they actually have been stronger than the metals, and that's always a good sign. And I mean, if you go back, not to go too far back, but if you go back to May and you look at the valuations, I mean, we were at 2008, 2000 levels as far as price to earnings, price to cash flow, and a lot of sentiment indicators that I like to look at were at multi-year lows. So it was very obvious to me that we were at a major bottom, and we've had a very strong rebound, and now we're just seeing a little bit of a pullback. And as you mentioned, I mean, when this market corrects, it's holding up much better than it did in the past, and that to me shows more internal strength. And as a bull market matures, that's what should happen. The bull market gets stronger and stronger, and how the market performs in corrections and consolidations, that can be a sign of a stronger bull market here in the 13th year or whatever it is.
Yeah, 12 or 13. I've lost track, honestly. But yeah, and the naysayers that were out there, claiming the death of the precious metals bull market, obviously it was greatly exaggerated because they're pretty silent right now, aren't they?
They definitely are, and it's funny you mentioned that. I remember writing a piece in May saying that there was a really strong chance that we'd see a major bottom the next week, and we actually did print the low that week in most of the precious metals. And I mean, just after I wrote that article, the comments I had on my website were just so they were so asinine and so obscene that I actually had to delete some of them. But I mean, that was a perfect contrary indicator. I mean, people were upset and thinking gold was going to go to 1,200 and these stocks will never go up again. And and now all the naysayers on TV, they stopped talking about gold, and now that we're getting QE and all this debt monetization is restarting, they're talking about Apple as a way to play it. I mean, how ridiculous is that? They acknowledge the great fundamentals for gold and gold stocks without saying as much. They say, okay, well, because of that, you need to buy stocks, you need to buy Apple. I mean, it's just ridiculous.
Hey, and I want to bring up a point that you raised. A good friend of the show, Peter Grandich, has raised, and I think people you need to understand that when you read a newsletter, it's not Gene Dixon. They're not like telling you what the future is definitely going to be. And certainly they could trace trends and tell you where we think it's going. But a newsletter writer shouldn't be abused because the market goes against somebody like Jordan. It goes against his forecast in the short run. Okay. This is for information use. I mean, I wouldn't expect to get nasty emails if I don't usually try to pick tops or bottoms because honestly, Jordan, you're better at it than I am. But come on, like all these, any newsletter writer is giving you is his or her opinion. It's not written in stone. And sometimes like all of us newsletter writers can be right at the wrong time. Generally they're pretty spot on from what I've seen, especially guys like Jordan. But have you found that, Jordan, that people were really getting angry with you, like somehow you were single-handedly controlling the markets?
Yeah, I mean that's just kind of typical behavior. But the one thing I would mention, I mean, in regards to what I said, is it was a free article that I posted. So it was people who were denigrating my service who don't even subscribe to my service. So, I mean, I've actually, so far this year, we've actually done really, really well. Fortunately, because we were cautious earlier in the year, and then, some of our stocks have done really well the last couple of months during this rebound. But I mean, the point is, the people who pay me money and subscribe to my service, they're free to give me a fair assessment and say whatever they want. If they feel I'm a total moron, which one or two people I think did say, but that was at the bottom of the market. I think they would think something different right now. And, I think most of my subscribers, their feedback is overwhelmingly positive. And so, I mean, that's kind of my point. A lot of, if you're people who are making comments like that, many of them, they don't even subscribe to these services. You have to pay money to get good advice. If you're just reading free articles and basing everything off that, that's not a good idea.
Yeah. And, let's face it, you guys are not psychic. You're good, but, hey, the market can go against us every now and then when we're not expecting it. when you're expecting it to do something totally different. That's my only point. And I know your record has been pretty stellar over time, and especially this year, been phenomenal. But you need to keep in mind that advice is just that. It's advice, and it's not. There's no guarantees here that future performance is going to, you know, duplicate past performance either. And I just think people need to really understand that.
Right, and you really need to educate yourself. I mean, you can't take everything that someone like myself or other newsletters say word for word. We're basically, well, at least what I try and do is provide guidance and analysis. I try and assess, obviously we're all here reading this because we're long-term gold bulls, which I strongly believe in. But as you and I both know, Carrie, there's some major twists and turns in these markets, and so I try and help people adjust to those twists and turns. I try and anticipate them when it looks like the market is a little heavy, as it looked a couple weeks ago. But I mean, you're absolutely right. I mean, nobody can predict the future. We're just trying to assess some probabilities here and there, and you shouldn't take things word for word. If that's what you're doing, you should probably read these things for a number of months and educate yourself before you really get in the markets.
Yeah, and once you think you really know what you're doing, that's generally when the market comes and rapidly disabuses you of that notion. But going ahead, obviously it's looking pretty good. Probably will be in this kind of channel, I would imagine, until after the election, because there's too many external forces and too much uncertainty. But it was interesting to note that the day after Romney's outstanding victory in the debates, and that's all it was a debate victory, metals prices went way up.
Yeah, that's a fantastic point, because people are going to come out, and if Romney continues to go up in the polls, people are going to come out and say, "Oh, well, this is bad for gold. This is bad for gold," which is total nonsense. Which I don't want to get into, because that's a whole nother conversation. But I mean, you said it right there, Kerry. I mean, just look what happened at the precious metals market the day after. I mean, it was on fire. And so if that was what happened, I mean, if that's if Romney were to win, and people assume that's going to be bearish for precious metals, I think that's totally the wrong assumption.
Yeah, I think we're so far gone. The economy is so far gone. The world economy is so far gone that whatever wealth you have is going to be chewed up if you stay in fiat currencies, and if you're not in something real. And real can be commodities as well as gold and silver, although historically, obviously we've said it enough times, gold and silver hold their value in exactly this type of environment. And in fact, according to the research, their value goes up. Their real purchasing power goes way up. And you see that happening all over the place when you actually price things in gold now, as opposed to going back to 2000 and pricing them.
Exactly. And the one thing I would mention in differentiating precious metals between the rest of commodities, I mean, generally speaking, I am bullish on the rest of the commodities, but look, gold is driven by investment demand. It's not driven by supply and demand in the way that every other commodity is. So what I'm saying here is, when you see oil go up a substantial amount, or copper go up a substantial amount, there's an economic component to that. There's a supply demand component, where if prices of those commodities go up very high, it's going to, I mean, it's a self-correcting force. It's prices go up really high, and then all the producers get excited.
Yeah, they up supply.
And new supply comes to market. So that's why with most commodities, it's very difficult for them to have the type of move that we've seen in gold, which has been a very strong stair-step type move. And that's because gold's driven by investment demand, and by a very, very small degree, it's driven by supply and demand. And by the way, even supply of gold has not increased that much, which is amazing, given that we're 13 years into this bull market. And silver is kind of it's half with the other commodities and half with gold. It does have that monetary component to it, and I mean, as we know, when gold goes up, silver goes up a lot more. So I think it's important for people to understand that and differentiate the precious metals against the other commodities in that way.
Yeah, very much so. And even oil, energy, when you have an energy shortage, drilling goes up because the profit potential goes up. But look, you're looking at new gold mines take 10 years to permit in the more advanced economies, and even in Africa and South America, it could take 2 to 3 years to permit a new mine, and in Canada, it could be 5 or 6 years. So, you're just not going to see the huge influx of gold and, to a lesser degree, silver hitting the market from new production. It just not going to happen. It can't, as a practical matter. So you could hope for minor gains or stabilizing, because you know what? New gold production is actually way down over the past 5 years or so, because you've had major productivity decreases in South Africa, which have more or less offset increases in the U.S., in Canada, and China. So as a result, it's kind of been a zero-sum game. So just on that basis alone, looking at it, investment demand going up and supply being pretty much static, you're going to have increases in the price of gold, and silver will follow and lead at times as well. And on that note, following and leading, people want to find out more about you. They go to your website, which is
thedailygold.com.
dailygold.com. We like it here at financialsurvivalnetwork.com. If you want to listen to this discussion between Jordan and I again, or hundreds of articles a week that get aggregated on the site, financialsurvivalnetwork.com. Don't forget, go to PrepareWise, order up some emergency preparedness food, put LUTZ in your discount code. You'll have a great deal. Jordan, we'll talk to you again in a month and a half or two.
Kerry, thanks for having me.
Always a pleasure.